you have a practice or are you running a business? Valuation is the ultimate KPI.
Hey there, welcome to another episode of the Valuations Podcast, brought to you by Truelytics, the premier business intelligence platform for the wealth management industry. My name is Mike Langford, and I am the host of the Valuations Podcast, and this is episode 10, and I am extremely confident that this episode is going to change the way you look at the market forever. How's that for like an interest, pique your interest line to start a podcast, all right? But I'm really confident that you're probably going to think of things differently. You may even start changing the way that you manage your clients' investments because of this podcast. I know for sure you're going to find yourself Googling some stuff after this podcast, and you may listen to this podcast multiple times in a row. And you may want to reach out and talk to my guest that's on this podcast and speak to him on your own after this podcast. So, who is my guest? His name is Jamie Wise. He is the founder of Buzz Indexes, and Buzz Indexes is running a stock index. They've created a brand new type of index. And I say brand new, it's a few years old. It is called the Buzz Next Gen AI Series Index. And what Buzz does, that is awesome. What Buzz does is it really makes index investing smarter. Now, if you think about the typical stock market index like the S&P 500, there is a relatively dumb index. It's 500 large cap stocks, 500 of the biggest companies we have trading in America. And when one starts to suck, they dump it off the index and they add a new one. Pretty simple, pretty straightforward, but it's upwardly biased and it gives you a good representation of the overall economy from a large cap perspective. And hey, if I invest in the S&P 500 index funds, it's a low cost investment and it's going to track, again, the S&P 500. So no need to be overly scared of underperforming the market. We also use indexes to let our clients know how they're performing against the market. So kind of benchmarks. And we use indexes to kind of inform clients and ourselves, like what's happening in the markets. But what Buzz Indexes does is it uses artificial intelligence to look at all this sentiment about a collection of stocks across the web, right? So large cap stocks, all the chatter on Twitter, all the chatter on StockTwits and blogs and other types of channels where people talk about investing. And they take all those millions and millions of conversations and they analyze them and they find what are the stocks that people are talking most positively about, and they create an index from that. And it's really exciting because this index has outperformed the S&P 500 for several years in a row now, and it seems to only be getting smarter. It's getting better. So I'm going to let Jamie tell you all the details about that. Before I do, I want to encourage you to check out the Buzz Index Fund. There is an ETF, symbol BUZ. ALPS runs that, so it's not actually Buzz Indexes doesn't actually run the fund. That fund is actually managed and distributed via ALPS. But if you are interested in having the ETF into your portfolio, you can go check that out on your own. Do your own research. Of course, all the disclaimers and disclosures that you need to think about. Okay, so do your own research. But if you're interested and you want to dig in and see how it's performed and all that type of stuff, you can go check it out. But if you have other questions, always ping us, valuations@truelytics.com. Hook us up on the socials. Please do like and subscribe to the podcast. And as always, tell a friend. Okay? All right. Without further ado, here's Jamie. Well, hey, Jamie, thank you very much for joining me on the show today. It's great to have you. And it's great to hear your voice again. You and I have spent a lot of time online together doing a variety of webinars and other things. And of course, we've spoken to each other many times, whether it's in person or on the phone. So it's really great to hear your voice. So Happy New Year. Welcome to 2019.
Thank you so much. Happy New Year to you. Great to reconnect with you and get the new year off to an interesting discussion. Thanks for having me.
Oh, great to have you. So, one of the things I like to do to kick things off is what I call having a little bit of an IMDb approach, right? The Internet Movie Database of somebody's career. And if you're a movie buff or if you binge watch a lot of shows on Netflix or whatever, you almost always find yourself on IMDb going, who's that guy? Where's he been in? And then you and your wife are talking about, no way, that guy was the guy from the other thing. So I would think it's kind of a fun thing to go talk to whoever's on the show about their journey to where they are now. So why don't you tell me a little bit about how you came to create Buzz Indexes and kind of the general arc of the career that led you here and maybe to that aha moment to creating Buzz?
Sure, thanks. Well, it's a long journey. And what Buzz Indexes is all about is measuring investor sentiment, directly on U.S. equities. And that journey for us began 6 years ago. For me, my interest in sentiment began 20 years ago when I began my career. So, my background is equity derivatives. I run a hedge fund here in Toronto called Periscope Capital. We've been in business for a decade now. And since the first day that I traded, frankly, since the first day a stock ever traded, anyone who's been involved in markets has this knowledge and feeling that sentiment moves stock prices, right? We know it, we feel it, we hear about it on TV, and we've had this problem of measuring sentiment, right? How do you measure it? You hear a guy on television, some expert tells you that sentiment is high or sentiment is low. We have all these proxies for sentiment, the VIX, put call ratios, trading volumes. We have all of these sentiment polls, the Michigan surveys that we're so used to hearing. And of course, our finance professors and all the talking heads tell us that sentiment is typically some sort of contrarian indicator, but we don't know that to be true because it would be too easy if it were just to sell everything that was high sentiment and buy everything that's low. So we have this idea of sentiment, and we never had this opportunity to measure it. And like I said, 200 years ago, the first time a stock ever traded on the New York Stock Exchange, it was a room of people. And don't you know, and I'd bet you whatever you like, that the sentiment and the conversations in that room were the things that were driving stock prices on a day-by-day basis, right? And we know that was the case. My journey really kicked up and ultimately became Buzz Indexes, like I said, about 6 years ago, when I saw an academic paper that was talking about, sort of mining and listening into the conversations that we're having on chat rooms at the time about people talking about stocks. And could you get insight from those conversations, and could you start to measure sentiment? And my aha moment, I think, was connecting that to what I was seeing happening around social media analytics generally outside of investing at the time. So at that point, 6 years ago, there was a lot of activity for social media analytics firms to try and understand consumer behaviors around products or experiences. So people understanding what consumers thought from Amazon product reviews or from vacations on TripAdvisor reviews and things like that. And there being so much data and companies spending so much money to understand what their customers were interested in because they were leaving this digital trail of information simply by talking about their products and experiences with those products or vacations or whatever the item might be on these online platforms. And that left that digital trail. And for me, I believed strongly then that there would be this continued growth in online conversation around stocks and investing because that was a natural extension of people's online experiences. So what started with social experiences and Facebook and sharing social experiences grew to sharing experiences about products and other items in their lives. And why not? Why wouldn't people go online to get the same kind of engagement around their stock picking, around which stocks they liked and which stocks they didn't, for all the same reasons that they were doing it already in their social lives? And if that would be the case, we would have this huge digital trail of independently volunteered information around people's views towards stocks that we could actually measure. We could have a data-driven answer to this lifelong quest that we've all had, or at least I personally had, which was, what is sentiment, and what is sentiment specifically on individual stocks?
I love it. It's so, you and I met several years ago at something called Stocktoberfest, right? Which is an event that's put on by StockTwits, which is a social network specifically for kind of exactly what you're talking about, right? It's kind of like Twitter. And what people do on that social network is they are always sharing ideas or attitudes or their experience, their investment experience, and what are they buying, what are they selling, and they're mentioning specific stocks, right? Specific stock symbols, particularly with a cash tag, as they call it, right? So $BUZ or $APPL for what they're interested in investing, and we see that also on Twitter. But when you and I kind of first met, and you mentioned this, I'm like, oh my God, that makes perfect sense. If you can find a way to take all that data and analyze it, you can absolutely see the direction in which the public at large is leaning. Are they leaning more towards thinking that Apple, as an example, is a buy, or are they thinking that Facebook is where they're putting more of their money? And if you could look at a large enough data set and enough stocks, you could really assemble a portfolio that was biased up just by what you're seeing. And that's kind of what you've done with
That's
Buzz,
exactly
correct?
it. And, that was the initial thesis of what we wanted to build or what we wanted to analyze from that data. And, just anecdotally, 6 years ago or so, when we first looked at StockTwits data, I think there were maybe a couple million messages from, various users on that platform. I think this year alone, they'll be pushing probably 60 million independent posts. Each post really a conclusion to a research report, right? It's someone's view on a stock based on that stock's trading characteristics relative to their view of its fundamental value. They're saying it's a buy or a sell, right? And they're saying it from a diverse perspective, whether it's a fundamental reason, a technical reason, short-term, long-term. It's this massively diverse analyst community consistently opining on whether they like a stock or not, whether a stock is a buy or a sell. And it's great. So the first thought is, okay, yes, we're going to assemble all this information and we're going to make sense of it. And then when you really get down into the weeds of what that means, first to build the algorithms to actually analyze all that information, because no army of investment analysts has the time to read tens of millions of posts and label them each one. So you have to be able to build the technology to do it. But then you have to figure out, how do you aggregate all of that information? Which stocks are relevant? There's 7,000 stocks that are being talked about in varying degrees across StockTwits and other online platforms. That was the first 2 years of our existence, was that research project of, what do we do with this? How do we extract value from this raw data set?
It's funny that you mentioned, prior to that, or that there was no amount of you couldn't hire the number of people you needed to analyze that manually, right? You had to build the technology. And I always think back to Peter Lynch, right? Famous Fidelity Magellan fund manager. And this is back in the 80s. He was talking about how he would go to the mall and just kind of watch what kids were doing, watch what teenagers were doing in the mall, and what stores they were going into, so forth. And he was kind of gauging sentiment that way, but it was very much a finger in the wind, a little bit approach, right? Kind of a little bit of educated guess, but instead you're actually taking a real hardcore data-driven approach to this.
Absolutely. He was pulling a very small sample size, his local mall in whatever city he happened to live in, that was subject to all the, very niche demographic factors or trend factors in his specific city, and sort of hoping to extrapolate that nationwide, and how that might affect different companies and different stocks. Well, now you've got millions of people, literally millions of people, going online and volunteering all of that information for you, right? So the data sets are just so rich with information. You just need the tools to analyze them. And that's where we've really got lucky a little bit, right? And advances in A, computer processing power, and B, the tools to take advantage of that power to be able to, in a much more direct way, measure that data set, right? And I think broadly people refer to that as artificial intelligence today. I don't even think 6 years ago people were using the word artificial intelligence for that kind of thing. But generally, that's sort of what it is, right? Is being able to train computers to learn by experience, to get better results than, natural language processing 20 years ago or even 10 years ago was really just dictionary based, right? It would build a dictionary, label each word as being a positive or negative word, and then search text for those words and try and determine if, it's positive or negative based on your dictionary labeling. But that's really an algorithm. But what we can do now is so much more robust because we can train computers from properly labeled data sets to understand nuance and context and acronyms and slangs and all of the way people talk about different experiences. And what I can tell you, one thing we learned very early on is, this idea of artificial intelligence today, or natural language processing, is so very task specific in the sense that people talk very differently on Amazon when they're talking about products than they do on TripAdvisor when they're talking about vacation experiences, and certainly the way they talk about stocks. So if you can train a model to understand the way people are talking about products on Amazon and then ask that model to then listen to a bunch of stock conversations, the accuracy rates just really go down because positive words mean negative things in stocks. Selling things might not be a negative thing when it comes to stocks. I can sell a put. That's a bullish stance on a stock, right? So there's all these different ways that you need to think about training your very specific tool to understand very specific sentences, much in the same way that image recognition or language translation is great, but your language translator can't recognize a picture of a dog or make you toast in the morning. There's no magic solution there. We're at this world where we have very, very good task-specific tools for very specific tasks that can handle large amounts of data. That's the AI world that we're living in today, but it can give you really good results if you've got it pointed at the right task.
It's really, really fascinating to think about how far we've come, how quickly, right? 10 years, my son and I have a 14-year-old. We talk about this a lot, about how different the world is today than when I was a kid. But, we also have these conversations about, Bill Gates' famous quote of people overestimate how much change will happen in 2 years, but they underestimate how much change can happen in 10 years. And when I think about AI and social and all the data that we are, as users, user-generated reviews, as you mentioned, user-generated content that we're putting out in Twitter and talking about our investing, that has just gone up so dramatically large. You talked about StockTwit's growth. We've advanced so quickly, so fast that it's really exciting to start to see tools like BuzzIndex, the BuzzIndex, being available now for average investors and for advisors alike. And that really leads me to my next question is I always ask the question of why should advisors care? Why should broker dealers care about this? But I guess what I mean by that is how do they take advantage of Buzz Indexes? What are some things that it can do for them in their practice? How can it help their clients, knowing that they can leverage the technology that you're putting into practice with the Buzz Index?
Yeah. So, there's so much to talk about there. Let's start probably with what is this Buzz Index? What is this thing we created? And then from that, how can it be of value to an advisor or an advisor in having conversations with their clients, and what insights can they get from it? And how can they maybe demonstrate some thought leadership by using this as a resource, as a tool? One of the first things we wanted to do when we started, once we solved the problem of building the tool to be able to analyze all of these millions of posts, we then recognized problem number 2, which is, well, there's 7,000 stocks, there's tens of millions of posts happening every year. We can label each post as being bullish or neutral or bearish, but then how do we want to aggregate that, and what are we trying to show people? And the idea of sentiment to me, first off, was let's focus on large cap US equities because it's stocks that people understand and recognize and are familiar with. And by the way, there happens to be the most amount of conversation there. Naturally, they're the biggest stocks, so they're talked about the most. But then we wanted to try and think of sentiment not as this very short-term, high-frequency trading concept where someone maybe influential or perceived celebrity says something and the stock moves right away. What we wanted to do is try and really measure the underlying trend of sentiment, right? Where that is happening over a longer term. It's almost like a momentum indicator. And so we measure sentiment a little bit over that longer time period, say, total aggregate sentiment over the last few weeks, as this idea that sentiment can have momentum to it. And so it doesn't flip on a dime. It will see through some of the short term. We know short term sentiment can be very volatile depending on an earnings release or, some person on TV saying something or an analyst coming out with a report. But if longer term sentiment, like a moving average of sentiment, will see through a lot of that noise. And then we also want to only focus on stocks that are being talked about a lot. So that's important, right? We need to see that every day people are talking about a stock, regardless of some kind of news flow or something that's happening. That if we have this consistent and diverse level of conversation, then if we can analyze that and look at that data for what the overall sentiment is for the stock, it really can be reflective of overall market sentiment for that stock. And then, changes in sentiment really can be more representative and potentially more predictive of the stock price performance. So we created this index, right? And what does this index do? It says, okay, of the most talked about large cap US equities, right now there's about 300 to 350 or so stocks that are market cap greater than 5 billion that are talked about every day by a very large number of diverse individuals. Let's measure that and let's measure that each and every month. And let's create an index sorted from most positive to least that holds 75 stocks. 75 diversified index. We'll cap the weights at 3%, and we'll put that index out to the world so that people can now actually see which stocks have positive sentiment and which stocks have great, relatively of the positive sentiment stocks, because it's weighted by positive sentiment, which stocks are the highest sentiment stocks. And let's see how that index performs. And let's see, is sentiment a contrarian indicator? Let's not focus on back tests or any of that. We'll have a live track record. And now we've got a 3-year live track record where you can actually see what sentiment can do. What kind of names come up in sentiment, and how does that index of positive sentiment names compared to a passive index like the S&P 500. How can an advisor use that? Well, now when we're talking about sentiment, we have transparency just like the S&P 500 would. You can look at our index and every day you can see the names that are in there and you can see the weights that they have. And so if you're an advisor and you might be interested in buying or selling a stock, you might want to check, how is that stock perceived from a sentiment perspective, right? You're already looking at it from a host of fundamental and technical factors. Those are all a given. You know that with data, and you can model those factors out. But sentiment was something you couldn't record. And that view of sentiment, is it in the Buzz Index or not, might give you added confidence to buy or sell the security. Maybe it's not in the Buzz Index, and that's another check mark to you saying, sentiment isn't really positive on this. I was thinking of selling this stock. That gives me confidence to sell it anyways, or vice versa. Secondly, it's really useful just as a talking point, right? And a really good use case of how changes in, sentiment's nothing new, but what has changed is people have been talking about stocks for hundreds of years, but they haven't been leaving this trail, this recording of their conversation. So now it can be analyzed. It can be analyzed with advanced technology. It can be analyzed at scale. And so we can have some degree of confidence that we're actually measuring sentiment directly as opposed to by some poll or by proxy. And I think that's a really interesting conversation to have.
I do too. I think it's fascinating to me to think about it. And, one of the things I like to nerd out on is, when I go look at the index itself, and you can go to buzzindexes.com to see this, and you can scroll down on the page and see the current 75 holdings or stocks that are in the index. I think it's really interesting to then go out to Twitter and so forth and look up okay, what are people saying about this? And you really can see it supported in the chatter. As right now, as an example, the top 5 holdings in positions in the index are AMD, which is Advanced Micro Devices, Amazon, Square, Tesla, and Microsoft. And lo and behold, those are definitely some of the most talked about companies right now from a positive perspective, right? They're all feeling themselves, if you will, in the markets. Relatively to other equities. So that's really, really fascinating to see that in action. One of the things that you and I had covered once or twice before, I think when we did a webinar together, were some examples of how the Buzz Index, the AI, caused you to add something to the index and then remove it from the index and then add it back kind of smartly. Is there anything you can kind of share with a listener? I know it's kind of hard to do without a graphic, but is there anything you could like kind of share of a success story that somebody might be able to relate to, of like, how has the AI been able to identify something at the right time that would help the index?
This is really the benefit of having our index being in the market for 3 years. We have so much data. Now we talk about a lot of data. Now we have our own data to analyze, right? So it's really interesting to see how it's evolved over the last 3 years, given the growing data set, given more people talking about stocks, so it has more experience to learn from, and how it finds those positive sentiment stocks and which stocks and how many different ones it's able to isolate over the year. So let's look back at what I think are some cool stats over 2018, specific to the Buzz Index. So remember, the Buzz Index holds at any one time, and it's rebalanced each month, 75 stocks, 75 large cap US equities that represent the most positive sentiment stocks in the market at that moment in time in the month. Well, throughout 2018, Buzz held 190 unique stocks. Okay, so if you want to think about turnover or how many different names is it isolating at any one time, we've had 190 different large cap US equities in the portfolio for as little as 1 month or potentially for the entire year. What does Buzz do really well? I think Buzz does a great job at identifying trends and holding them so long as sentiment stays positive through the short-term sentiment noise. So you mentioned some of those stocks, and at the end of the day, Buzz is a stock-specific story, right? It's all about the stocks in the index. So what were the top 5 contributors to Buzz return last year? And Buzz, by the way, beat the S&P last year by about 4.5%. Top 5 names: AMD, Square, Twitter, Amazon, and Microsoft. And there's a couple interesting things about these 5 stocks. First, the Buzz Index held them in all 12 months. So it was always long these stocks. And for most of them, it was long at its near max weight allowed in the index, which is 3%. Interestingly enough, those stocks were amongst the best performing stocks in the market, which had a down year last year, as we all know. So AMD was up 80%, Square 60%, Twitter 20%, Amazon 30%, Microsoft 20%. So these stocks that really had price momentum going last year in a difficult market, sentiment identified them and sentiment never wavered. And I can tell you on all these stocks, especially maybe our top 2, AMD and Square, there were lots of short sell reports in the market, negative comments from analysts, some great earnings experiences, a bad earnings experience. Whatever the case was, sentiment remained strong throughout the entire year, and that gets reflected in the index. So that's pretty cool. The second interesting thing, if I look out of the 190 stocks, let's say we just look at the top 50 contributors to the returns last year. 15 of those 50 names generated a positive return for the Buzz Index, while the individual stocks themselves posted a negative return on the year. Okay, so let's think of that.
Wow.
That means, remember, Buzz is a long-only index, right? Even though I'm a hedge fund guy, this is a long-only, fully invested large cap index. So that means that there's timing in play here. Buzz is able to identify timing such that it could generate a positive return from 15 different names of its top 50 contributors while those stocks were still down on the year. So sentiment, I think that's sort of a little check mark in your box there, that sentiment can be predictive of things. And it's not necessarily this contrarian monster we've been taught of. And if you want a really specific example, Snap is probably the best one I can give you. So let's think back to Snap last year. Snap was down 62%, right? Getting destroyed by Facebook, all of the stories we've heard in the financial press. Snap was the number 11 most positive contributor to Buzz last year. Snap was part of the index in January. It was gone for the spring, came back in May, just through the summer, and then gone. And then if you look at a stock price performance of Snap, you'll see those were right before the rallies, right? So we saw this sentiment momentum building in that name, and we measured it just at the right level to hold it for that period. But as it changed, we were able to react to that. And it doesn't have to be on a day-by-day basis. You can, we're not trying to pick the absolute low and the absolute high. That's not what the model's trying to accomplish. But it can measure these changes in sentiment and be flexible enough to do it, to be in and out of stocks throughout the year, where you have a name like Snap. We've got Align Technologies, a Bausch Health company, one of my favorite, this, I've talked to you about this name before. This is such an interesting stock. This is the old Valeant. And I'm sure a lot of your listeners are familiar with Valeant because it was in the financial press so much because Bill Ackman and his activist stake. And, the stock goes from 0 to 300 and sort of round trips, right? And he's defending it and changing the names and all that stuff. Valeant last year was down 11%. Well, it contributed 17 basis points of positive return to Buzz. And what was interesting was on the way up, Valeant or Bausch Health Companies was never, ever in those first couple of years of the Buzz Index, part of the Buzz Index. And on the way down from 300 to about 30, not in there. But something happened when Valeant and now Bausch Health Companies hit that $30 mark. We started seeing little drips of positive sentiment start. And people started viewing that stock as some kind of value play. And it's been in and out of Bausch Healthcare for the last year and finding those right turns in the stock. And that leads me to the second interesting thing that we've discovered about sentiment. And I don't think it would have been intuitive to us on day one when we started measuring it, is sentiment is not a reflection of price performance. It's not a price momentum index. You might think, well, people are only talking about stocks that are moving from the bottom left to the top right? That's not what sentiment is. Sentiment is people's view on forward price momentum. And there are two key reasons why people become positive about a stock. One is it is a good growth story. It is a bottom left to the top right, and they expect that growth trajectory to continue into the future. Not just because it happened in the past. They have an expectation, whether it's technical, fundamental, whatever their bent is, that's their view. The second is value. Stocks that are falling or have been beaten up, and people represent them as good value, right? They are trading at a low multiple. Their dividend yield is sustainable. All of the classic reasons why people like value stocks. So when you measure sentiment, you don't just get a bunch of high PE stocks that are trading at astronomical levels who have growth charts, the stock price performance off the chart. You get this barbell-like portfolio of a combination of value stocks like Bausch Health Companies, or interestingly, and recently a negative performer for Buzz, right? The last year's worst performer in Buzz, GE. Isn't that interesting, right? Certainly not a price performance name from the top left to the bottom right, but people viewed it positively from a value perspective, but early. Okay, so GE still in the index. We'll see what happens in 2019. Maybe it'll go from worst to first. It's certainly kicked off the year with a good rally. I think it's up 10% or so far this year. So people have that view of sentiment, and you get a portfolio of stocks where you have, there's a dividend yield to the underlying equities, and sort of the average price earnings level of the name in the Buzz Index right now is around 18, right? That is not what people might intuitively think when you think of sentiment. It's not momentum. It's not the MTUM, ETM. It's forward momentum. Very exciting, very interesting.
That is fascinating to think of it as picking up growth and value. And it's funny, when we first started talking about sentiment, believe it or not, my first thought went to value, because it's like, well, if people are starting to talk about something as it might be a good investment idea, usually you start thinking about something being a good investment idea when you think the price is low, right? When you're like, oh, I see a lot of future in this, and why is it priced low here? And then, of course, as it gets going crazy, everybody wants to jump in on the momentum.
I think Square's great to jump in on that comment, right? Because I think what's interesting though is what the analyst army can and I call the population that we observe online my analyst army, because that's really what they are, right? It's my million-strong analyst army, and they're so diverse. And when you can get enough diversity together and you can observe a common theme, you can get some really interesting insights. And Square is such a great example of that, right? So Square, here's this company that people viewed, maybe the true analysts, the investment bank analyst community, I think they viewed them a little too simply as some just payment processing company. But the investing community at large really saw through that story and saw the potential of what Square could do in the marketplace. talked about the engagement of their products, how much they liked the experience, and how they saw Square being able to leverage that into other areas. We were just talking before the show. I was down in South Miami over the holiday break. I think every store I walked into had a Square processing terminal on it, and every time I see one, I ask the clerk, "What do you think of this?" And it's unanimous. This is the greatest, simplest, nicest tool we've ever had. Right? I think the investing community, the analyst army, saw that sea change coming more than anyone else, and was able to look through all of the noise that we heard in the financial press to capture that. Is that a growth story? That's not just a stock that's trading way ahead of itself. That was a stock that people believed would grow into its valuation and then have room for more growth. And that's why Square was one of the best performing stocks in the market last year. And I think that is what we can capture by observing.
Great. So, we're getting close to the end here, but I did have one kind of closing idea that I wanted to run by you, and hopefully the audience listeners can kind of appreciate this. Is that the general question is Buzz getting smarter as time goes on? And I think you've sort of answered that already, but I think it helps to compare it to the way that the traditional indexes that we use, whether it's for benchmarks or for index investing, the way that those indexes work is they're kind of passive and sort of dumb, right? That, once a stock is added to the S&P, it kind of stays there. The only change going forward is based on its weighting, based on market cap, right? And if it really starts to suck, it falls out of the index and it gets replaced by something else that is another big company. And that's how it gets its kind of positive upward performance bias. But that's about as smart as the S&P or as smart as the Dow gets. But Buzz seems to be actively, because of the algorithm, the intelligence, the size of the data set, getting smarter as we go along. Is that the way you look at it as well?
Yeah, I do. I think we have to be careful about smartness and experience. Okay. And I go from, so I think about what makes us smarter as human beings and what makes models and AI smarter. It's a shared thing, and that's experience, right? We are, better drivers at 40 than we are when we're 16 because we've had 25 years of driving experience. We've seen lots of different situations, right? Computer models are the same thing. That's what AI is today. That's what this concept of a neural net is. It's learning by experience. So how can Buzz, or how has Buzz gotten smarter? It's not that it's gotten smarter. It's gotten a lot more experience to be able to make more informed decisions. And how do you get more experience in modeling terms? You need more data. Data is its experience. So to the extent that we've seen this huge growth of data over the last few years, the model has had all of that experience to understand the way people talk about stocks, the changing ways people are talking about stocks, and new stocks that are being introduced to the conversation. So so here's the final answer to the smartness or experience. 3 years ago, when we launched the index, we had this idea that we wanted to focus, and I said this earlier, on the stocks that were talked about the most, right? The most diverse, the most consistent, really representative of the analyst community, my analyst army at the time. 3 years ago, it was about 125 stocks that met that threshold. When we first started our conversation today, I mentioned it's around 300, 350. So why is that? It's because more people are talking about stocks in greater numbers. So now my analyst army is giving me not just actionable, accurate sentiment information on the 125 relevant stocks. I've got 300 to 350 to choose from. That's how the Buzz Index can have 190 unique holdings in 2018, where in 2016 it would have had maybe 100 or so at most, right, out of the 125. That's how it gets smarter. That's how it finds better ideas. And that's why Buzz can beat the S&P last year by 4% when it beat it by less than 4% the year before. And already in 2018, it's kicked off ahead of the S&P by 2.5%. More data, better experience. That's smart in technology terms.
That's amazing. So I know that people are going to have a lot of questions and want to dig in more. And whether those people are individual advisors, RIA firms, owners of RIA firms, broker-dealer executives, and so forth. So a couple of quick, very good closing questions that might be helpful for them is, are you available for speaking engagements or webinars on this topic of investing based on sentiment data and artificial intelligence? So you make yourself available for those types of talks?
I am indeed, and have been active in the past, both to the broader community as well in the hedge fund community that I also live in. So yes.
Very cool. And then lastly, what is the best way for people to reach you? They just swing by buzzindexes.com. Is there, you on social, you email? What's
if you're in Toronto, come and say hello. But of course, the best way to reach me is just send me an email. I'm very reachable. I'm attached to my technology, as you can imagine. So it's Jamie, Jamie, at buzzindexes.com, BUZZINDEXES, Jamie at buzzindexes.com. I will answer that email. I promise you that. And of course, like you mentioned earlier, just head over to the website, buzzindexes.com. You'll see a lot more material about sort of how we came up to the concept, how the index is actually constructed, the guidelines, the white papers, and the like.
Very cool. Well, I want to thank you very much for joining us today, Jamie. It's been a pleasure as always to chat with you. And I'm sure everybody got a lot out of this. So I hope you have a great day, and maybe you'll join us again sometime.
You as well. Look forward to it. Thanks so much.
All right. Thank you very much to Jamie Wise of Buzz Indexes, and thank you for listening. I hope you got a lot out of this. I know we went a little long. I think there was about 37 minutes or so of talk time between Jamie and myself. And of course, I had a little bit of an intro there, and here I am still talking at the outro. But listen, this is where the industry is headed. If you look out 10 or 20 years from now, do you imagine we're going to have more artificial intelligence involved in investing? Do you imagine we're going to see more sentiment analysis in investment selection process? The answer is yes. Of course we are, right? And so the faster you and your team and we as an industry get out ahead of this, we start to understand how it works, understand how we can apply it in our business, and understand how we can use this type of technology to serve our clients better, the better we'll all be. So I hope you got a lot out of this. As always, look forward to your feedback. Feel free to comment on wherever you heard this podcast. Leave us comments, like us, recommend the podcast to your friends and colleagues. And of course, if you want to see anything else on the show, send in your ideas, valuations@truelytics.com, or swing by truelytics.com and use the contact us page there. And of course, on the socials, Twitter, Facebook, LinkedIn, whatever you prefer, we're there. Looking forward to hearing from you. Okay? Hope you have a wonderful week, and we will talk to you next time on the Valuations Podcast. See ya. Bye.